headed into the Fed rate decision, into the ECB decision, BOE next week. Not to mention that, of course, in a few hours, we do have Malaysia's rate decision as well. How do you position in this environment of uncertainty?
Well, I think if you take a medium-term view of the markets, we remain constructive, we remain relatively positive. But in the short term, as you highlighted earlier in the show, a whole slew of headwinds. The outlook for the Fed policy, the U.S. debt ceiling, uncertainty about recession and economic outlook. So those things will continue to create volatility in the markets. And what we are telling our clients is that, yes, there are good reasons to be cautious about the short-term outlook, but do not lose sight of the medium to long term as well, because at some stage, the Fed will win the battle against inflation. That may take place in 2024. And at that point in time, if it turns more dovish and cuts rates, the markets could rally, as we've seen historically. But from now till then, the markets are going to be volatile, and all the headwinds that we spoke about earlier will continue to create volatility in the markets. But volatility is a two-sided coin. It reflects risk. At the same time, it can also create opportunities, but you've got to be very selective.
When we have this congressional standoff on the U.S. debt ceiling and also uncertainty about where the Fed goes, how do you play that volatility?
Well, I think you look to perhaps drip feed into the markets on sharp pullbacks. The debt ceiling debacle clearly may weigh on the markets as we run up towards the deadline in early June. Now, if there is a significant pullback, we see it as an opportunity for investors to actually position and buy perhaps a bit more. Because historically, the U.S. Congress has eventually come to an agreement. I mean, it may come to the last minute. Negotiations may be taken to the wire, but, eventually they will see an agreement, because otherwise they will, either party will pay a heavy price at next year's presidential election. So there will be an agreement at some stage. It's a question of whether they suspend the debt ceiling or increase the debt ceiling, if they cut back spending. But an agreement will take place, and any sharp pullbacks actually present an opportunity in our view.
What are you watching here in Asia? Because there's still a great deal of uncertainty when it comes to the resilience and even the robustness, right, of the Chinese rebound. If you take a look at the latest numbers, that sort of bifurcation between the different parts of the economy, what are you optimistic about?
Well, we are optimistic generally about China. But having said that, the Chinese stock market had a good run since, September, October of last year. It's taking a breather right now. The economic data appears to be relatively mixed, but, I think China is slowly getting back on its feet. We think China is an exceptional case. I mean, we are positive on China. China is going to be the only major economy in the world that is going to post stronger growth this year compared to last year. It's one of the very few economies in the world where inflation doesn't appear to be a problem at this juncture, which accords the central bank and the government room to stimulate the economy if necessary. And, so consumer-related plays, tourism-related plays, infrastructure-related plays, companies that are leveraged onto clean energy, green technology. Companies like this will benefit from China. Going forward, I think the Chinese government is trying to stimulate domestic demand, and companies that are leveraged onto the domestic economy will benefit, including domestic tourism.